Welcome to People and Profit, the business show with good beer and good music. Coming up, just how far will the trade spat between China and the United States go? We'll discuss the risks and potential weapons in this escalating dispute. From slayer to saviour of the music industry, how Spotify has transformed the way record companies make money. And we've a report on Paris's brewing boom in homemade beer. First up, though, China and the United States are upping the ante in their trade dispute. Beijing and Washington have imposed tariffs on a range of each other's goods, affecting imports worth tens of billions of dollars. The pattern of tit-for-tat levies will hurt the world's two largest economies. But speaking on Wednesday, China's Deputy Finance Minister was defiant.
China has never given in to external pressure. Pressure from the outside will only encourage our people to work even harder and be even more focused on our economic development. If you look at it another way, external pressure can be a driving force in our pursuit of innovation and growth.
Well, to discuss this issue further, we're joined now from London by Dr Linda Yueh, the economist, broadcaster and author of the book The Great Economists. Thank you very much for speaking to us. We've seen China and the United States progressively raising stakes in this dispute. Can we now call this a trade war?
It's certainly headed towards one, but it doesn't necessarily mean that we'll end up in a position where both economies are truly economically damaged. And the reason I say that is, of course, this is a significant further round of tariffs that the United States has announced against Chinese goods. And China has been very proportionate in essentially levying the same amount of tariffs or taxes on U.S. imports. And until you get to a point where it really escalates, which is quite possible, given that the next stage of this is that the Treasury Secretary of the United States is looking into restricting Chinese investment into the U.S., and we would expect under the current tit-for-tat system that China would reciprocate. I think that would take us a long ways down towards an unfortunate trade war if both countries started to actively disrupt supply chains, because that's actually what investment is about. A lot of global trade is done by companies investing in different countries, producing different parts of their goods in different countries, and then selling them on for final export. So targeting investment, I think, would be a serious escalation.
On the current measures that we've seen, who is likely to hurt first in this battle?
I don't know that we can really weigh it. I think in one sense, obviously consumers in both countries will be affected because tariffs are a tax. So even though the Commerce Secretary of the United States says it's only a small increase in price, but for a lot of people who every penny counts, it will hurt if prices start to go up. And remember, in this latest round, we're now talking over 100 products, which you are going to see price increases. So I think consumers in America, consumers in China, businesses in both countries will be affected. But I think given that the next round of restricting investment, if that were to come to pass, I think there's a greater potential for China to be harmed, because it's more important for China to be able to access the best technology and global markets if it wants to raise efficiency in its own economy, which is critical to its growth, because obviously China is a middle-income country trying to grow rich, and America is a rich country.
One of the things that the United States has taken issue with is the rules around transfer of technology for American companies that want to do business in China. Do they have a point there?
Well, yes. China is a relatively closed market. There's been a lot of complaints by foreign businesses, not just from America, but also from Europe, about accessing that market. And once you access that market, quite often China used to require technology transfer agreements. And oftentimes the Chinese also required foreign companies to hire half Chinese staff, half Chinese managers. Now, this is viewed by the Trump administration as a theft of intellectual property. The Chinese counter-argument is that big multinational companies are not known for their investment benefiting developing countries.
One of the other aspects of the relationship between China and the United States is debt. China is the biggest foreign holder of US government debt, over $1 trillion worth. Is there any chance that that could play into future escalations of this dispute, you know, if the Chinese were to drop their interest in US debt, could that hurt the United States?
That hasn't been mentioned by either side, and the reason for it is because foreign exchange reserves are, in one sense, a form of wealth, but in another sense, they're just a stabilizing mechanism for the exchange rate. In other words, China used to have about $4 trillion of foreign exchange reserves, is now down to about $3 trillion. About $1 trillion of that is in U.S. Treasuries, but it's pretty liquid. It depends on how much China intervenes in its exchange rate, which it doesn't do very much anymore, which is why the foreign exchange reserves have come down. This is not, I think it can be sometimes viewed as something more than what it is, which is a balance of payments thing. It's much more, I think the issue is much more around whether or not China and the U.S. retaliate in terms of further tariffs, cutting each other off from each other's markets, affecting firms, global supply chains. And I suppose in a worst-case scenario, President Trump blames the World Trade Organization, which oversees global trade, for not imposing a level playing field on China. And he has threatened in the past to pull out of the WTO. And that would, if he were to do that, that would upend the rules-based global trading system. And that would have a massive impact, not just on China, but also on the rest of the world. And so I think there's a lot of tools that could be deployed. And I would highlight investment and the WTO rules-based system as unfortunate escalations that I hope we won't see.
OK, Dr Linda Yueh, economist and author, thank you very much for speaking to us. Next, it's the world's leading music streaming service and now one of the most successful tech firms to float on the markets. Spotify made its debut on the New York Stock Exchange and after its first day of trading was valued at more than $26 billion. The firm has transformed the music industry and its love-hate relationship with artists and record labels has changed the way they interact with fans and make money. Ivana Scatola has been looking at Spotify's story.
It's a Swedish success story. Starting out as a small startup in 2006, Spotify envisaged changing the way people listen to music. And the ad-based free-to-use service has done just that. Since entering the American market in 2011, revenues from streaming have overtaken both physical music sales and downloads. In 2016, streaming earned record companies almost $4 billion.
For me, as someone growing up in a working-class suburb in Stockholm, I couldn't afford all the music. So back in 98, 99, I was really thinking about how I could get all that music and do it in a legal way while at the same time compensating the artists. And that's where the idea of Spotify came up.
But the road hasn't been easy. Spotify has met a lot of criticism from artists and record labels, unhappy about not only how much they're paid, but also that streaming services are eating into their album sales. Artist Taylor Swift famously ended her contract with the company back in 2014 for this reason, pulling her entire catalogue from the platform. But she returned 3 years later and recently chose to release her latest music video exclusively on Spotify. And it seems many in the music industry are coming round to the idea that people have simply changed the way they listen to music.
Streaming now and on-demand music services, we are seeing growth again in the music business, which will be welcome for record labels and artists. What's interesting for a company like Spotify is, can it change that relationship? Can it have a direct relationship with artists? Does it shift the position of what it means to be a record label if an artist wants to go direct to Spotify?
Spotify's revenue from paid subscriptions is 10 times bigger than its advertising revenue, and both have doubled over the past 2 years. Its paid subscribers stand at 71 million, with closest rival Apple Music a distant second with 36 million. Despite this, Spotify has failed to turn a profit in its 12-year existence. Analysts say its recent public listing may prompt the company to change its current business model in an attempt to make it more profitable for potential investors.
Now, France isn't necessarily known for its beer, and in fact, in terms of consumption, the French are near the bottom of the league in Europe. But a recent boom in artisanal brewing has moved the country into third place when it comes to the number of beer production sites. This as the market rebounds after decades of decline. This report now from France 24's Brian Quinn and Charles Pellegrin.
In France, the land of wine, beer is often overlooked. but those who love it are increasingly taking matters into their own hands.
Okay, bienvenue. Première chose qu'on a besoin de faire, c'est de préparer la malt.
Brew Unique is one of several startups in Paris where clients come to learn the art of beer making.
We noticed a major increase in interest to brew at home and the trend of people wanting to go to ateliers to learn how to do things on their own. It was a no-brainer to put the two together.
Clients pick their recipe, carefully measuring out a combination of different malts. After boiling for an hour, hops are added for bitterness and aroma, and yeast kicks off the fermentation process. After a month, each batch will yield 18 liters of beer.
I have some friends who already brew at home, and to have a first experience here, it gives me some confidence.
Those who stick with the hobby can find their supplies at specialty beer shops like this one in central Paris. The owners here say they've seen an explosion in interest, with sales of brewing ingredients up 60% over the past 2 years. After 3 decades of stagnation, the beer market in France is finally growing, thanks to a huge uptick in artisanal brewing. Over the past 4 years, some 500 independent breweries have opened in France, for some 1,200 currently operating. Here in northern Paris, the Pan Am Brewing Company has been making their own beer on the premises since 2015. This spring marks their first ever amateur brewing contest. Dozens of hopefuls have submitted their beers to be judged by a panel of experts. The organizers hoping to nurture the fermenting French scene.
Unlike in Belgium and Germany, where they already have a tradition, a culture, here anything's possible. You can do whatever you want, it's great.
The contest winner will have their recipe produced in a 500-liter batch to be sold at the bar. The rest will simply have to drown their sorrows.
That's France 24's Brian Quinn reporting there. I hope you got a beer at the end of all that. Well, that's it from us for this week. If you have any thoughts on the stories we've been covering, do get in touch. You'll find us on Facebook at France 24 Business, or you can tweet me at NewStephen. Until next time, thanks for watching.
French Connections, presented by Florence Villeminot.
They're known for their cuisine and saying hello with a kiss. They only work 35 hours per week, when they're not on strike, that is. How true are these clichés about France? Every week, Florence Villeminot tears apart stereotypes. Join us for insight into French culture and current events to understand what makes the French so unique.
French Connections on France 24 and France24.com.